Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Jobs Friday morning pre-market webcast. Okay, daily chart of the ES, and apologies about yesterday. A combination of the storm knocking out my power, erasing some indicators on my chart, which I absolutely need to trade during the day, and then when we did get into the trading day, things get really busy, and I'm in the room with the subscribers, and um, when those days get busy, my focus has to be there. So apologies, and we try to get these out every day, but sometimes Mother Nature and the market doesn't let us do that. What's the setup for this morning? We got jobs. Here's what I'm seeing. We're climbing up this 9-day simple moving average. It marked the low yesterday, 71.5. Right now, it is 73.5, which matches up pretty well with our pre FOMC number, which is down at 73.25. So if the reaction is positive to jobs and we get a muted move down into the 73s that holds, that's definitely an opportunity to get long. I would make it prove to you, that it wants to be support. And for those of you that haven't followed me for a long time, if you follow me for any period of time, you know what I'm about to say. Don't game jobs. Don't game jobs. You don't have enough knowledge, enough expertise, and enough information at your disposal in order to be able to place a trade, anticipatorily place a trade on the ultimate reaction to the jobs report. We just don't. No individual trader does. And the best way to handle large reports like this is to get out of the way, wait for the reaction, find the range, the upside of the range and the downside of the range, and see which side breaks. And that's what we had on Wednesday with non-farm. I got jobs on the brain with FOMC. You had 73.25 before the number. It traded down. We traded up to the top of the range, was around 78, and then we finally broke through 78, and we were able to move higher. When that low end of the range that was already established down at 70, when that gets established as support, then okay, now I can become involved. Things have calmed down, all the jumping around has stopped, and I can find a trade that I can actually trade. Okay? Trading the market should not be like playing Xbox One. You need to wait for all those jiggles and wiggles to get out of the market. New traders love to trade the whip and the move. And more experienced traders just sit there and go, "What are you doing?" You can do well if you are fast, but it's the one time that you're not fast enough that can really damage your account. So, what are the numbers I'm looking at up here? My principal concern on the upside is 82.83, 82.5, high here, 82.75 the high yesterday. The bulls are out of time. They're out of time. The bell has struck. They have to take out 82.75 with conviction today and go to work on the highs. That has to happen off of a positive reaction to jobs. If we establish 82.5 as the high of the range of the high of the jobs reaction range, okay? I hope that makes sense. When we have a reaction to jobs, there's going to be a level that's established. If the upside of that range is 82.5, the bulls are in big trouble today. Big trouble. Because not only has 82 to 83 been established as the jobs reaction range high, it pretty much solidifies it as a resistance ceiling from back, into last week, based on the last, 7 to 10 sessions. That they can't get through 82.5. That will embolden the bears, and then you see a push back towards 57.80, which is the middle band. Now, last thing. If the reaction is incredibly negative, I was looking at 1840 as a reaction low area earlier in the week. We did 1844. If for some reason we just completely dump out here, if it's the worst jobs report we've seen in a long time, or whatever the report is, doesn't really matter. If the reaction is the worst we've seen in a long time, I would be looking then at a situation where the bears get ahead of themselves, and you can find matching lows in the 44 area. And if those lows hold, then that's an opportunity to buy. That also goes for the fact if it's negative and we bleed out all day, if we get down to 44 today, it will be too much too fast, and likely you can get a little bit of a bounce off of it. Maybe not a bounce you can hold because you don't know what's going to happen Sunday night into Monday, but you have to be looking at this 44 on the down. Okay, I hope that helps. Follow me on Twitter at Princeton Trader. Come check out the website. Come check out the chat room, because that's where me and Spring Hill Jack and all the guys. That's where we are during the day, and we would love to meet you, and we'd love to help you with your trading. Okay, take care. Have a fantastic weekend. I'll be out Monday morning with another webcast. Trade them well.